Hey there, Josh Knoll here with Gulf Coast Financial Advisors. We are a fee-based financial advisory practice located here in downtown Fairhope, Alabama.
And I'm Jay Stubbs, Regional Director for First Protective. We're a risk management firm that partners with Josh and firms like his to help him with the insurance needs of his clients.
Perfect. All right, Jay, we're going to dive into a topic today that we're going to do a quick hit on it. It comes up quite a bit. Someone is trying to figure out how much life insurance they need. There are a couple things that I think a lot of folks don't realize when it comes to life insurance. So first, let's dive into how is life insurance priced? Is it per unit? How does someone, when the insurance company prices it, how are they doing that?
So they're pricing it on a couple of different factors, and you may be familiar with, I've heard preferred best, preferred, standard plus, tobacco user, not tobacco user,
right.
Cigarette smoker, not cigarette smoker. At the end of the day, it's male or female, date of birth, tobacco use, and certainly the amount of coverage you're looking for plays a big part. So we plug in some of those components into a calculator and outspits a cost per month or a cost per year for whatever amount we're looking for. However, insurance companies, based on their experience, have said we're going to charge a cost per thousand.
Cost per thousand.
Cost per thousand. That cost per thousand is going to be in blocks.
All right.
From $10,000 of life insurance up to $99,999, that's a block of cost, and that cost per thousand is going to be, let's call it X.
All right.
From $100,000 up to $249,999, that's going to be another block, and that cost per thousand is actually going to be less than the cost per thousand of the smaller face amount.
Let's call that Y.
Let's call that Y, or also X minus.
X minus.
Okay.
I like your version.
And then we have the $250,000 block up to sometimes $500,000 block, or up to the $999,999 block, and that's going to be X minus. Right. So our cost per thousand on the low face amount is higher than the cost per thousand with most insurance companies on the block, say from anything above $250,000.
So to add additional coverage, if I'm looking at $100,000 policy and I'm looking at maybe taking that to $250,000, what you're telling me is the charge per thousand on that first $100,000 of coverage in general is higher than the cost per thousand on the 100 to 250 range of that.
Yes, and let's clarify, it's not more expensive out of my pocket to pay the premium. Yes, a $100,000 policy is less in cost.
Total cost.
Total out of my pocket cost than a $250,000 policy would be. But if an individual or a business owner or family is trying to decide what they're, based off their needs analysis, what's right for them, if they can financially justify needing a $250,000 policy, their cost per thousand will actually go down, and then it's recalculated. Yes, their out-of-pocket premium would be more than a $100,000 policy, but they have a lower cost per thousand.
Well, let's do a real quick, real-world example. You and I both used to be 40 once. What would a 40-year-old male, what would be the difference on, let's say, 20-year level term of $500,000 versus $1 million? And
Great question.
Let's do some real world.
This is real world. So we're going to assume preferred. We're both in pretty decent health. Don't have too many chinks in our armor. But let's assume preferred 40-year-old male, 20-year term. For $500,000 of 20-year term, it's going to range, let's say top 5, top 6 companies, $36, $37, $38 a month.
All right.
Now, for that same 40-year-old male preferred, for $1 million of coverage, one may say, well, I'll just simply double
that number, which would be $72
$76 a month. When in actuality, if we run the numbers on a calculator, $1 million of 20-year term for male age 40 preferred is anywhere from $65 to $66 to $67 a month.
Wow,
that's in the grand scheme of things, not that huge of a difference. But multiply that difference of $7 times 12 months times 20 years.
That's $2,800, I think. Check my math. That's a lot. That's hundreds of dollars.
That's a big difference. If you're adding it up on a term insurance policy, if you feel that you will ever need more coverage than you're actually thinking about using, we certainly want to perform a needs analysis. We want to run adequate quotes based on your risk class, so we'll ask you some questions there. But we're also going to make sure that your cost per thousand is in a range that you are expecting for your overall financial plan.
So, I mean, the bottom line is if you get a number for 250 or 500,000, it doesn't hurt to see what the next step would be sold in that block. It may be less than you anticipate.
That's correct.
And literally, I don't know about you, but more often than not, when we sit down and we talk about term insurance for somebody that can qualify for some healthy rates, they're usually pleasantly surprised by the buying power of their dollar to that face amount.
The number one thing that we see is people who are not well versed in risk management, specifically life insurance, and they say, "Oh,
there's no way I could afford $1 million.
There's no way I could afford $1 million policy." Right. Well, you just heard a male age 40 preferred for 20-year term for $1 million.
Right.
Is anywhere from $65 to $68 a month.
And as you and I both know, a lot of people discount their productivity over a working career. They think, oh my gosh, $1 million, there's no way no one ever need that. But if you take what you make, I mean, simple calculation, take what you make per year times however many years you still got with kids or somebody dependent on you, that number gets pretty big.
Yeah, I like to say, I mean, the insurance companies say we have a factor.
Right.
What is your income times however old you are? They give different factors. So if I'm a 25, 30-year-old person and I make $50,000 a year, automatically I know I can get 30 to 35 times 50,000 in a death benefit plan, up to that amount. Without any blink of an eye, underwriting would understand, yep, your earning power over the next 30 years is certainly worthwhile having that protection.
Perfect. All right, and last little piece, do insurance companies like whole round numbers, or do they like it when you come and say, I want $876,922 of coverage?
It really doesn't matter. Financial planners like to plug in specific numbers.
Yeah, right.
But if somebody wants 876,000 and some odd number because it fits their plan, do it.
Right.
It does not make a hill of beans to an insurance company.
Right.
But if somebody says, oh, just round that thing up to $1 million or round that down to a nice round number, that's an adequate.
Well, and I can tell you from experience, when you have a kind of an odd number like that, sometimes the jump to the next round number where the insurance company is a little more comfortable with all these round numbers, if you will,
that's right,
is usually proportionally not a big jump.
So what I also like to say is if I see an odd face amount or an odd death benefit amount of coverage come across the desk, that means somebody has done an adequate needs analysis. So if you see $715,000 of coverage, not 700 and not 750, but 715, somebody probably has done a needs analysis, which is the proper way to assess how much coverage you need for your protection of your family or your business.
Very well said. Thank you for joining us today. If you'd like to reach Josh Knoll, please visit gulfcoastfa.com, email josh.knoll@gulfcoastfa.com, or call 251-327-2124. You can reach Jay Stubbs at jstubbs.com. That's JAYSTUBBS.com. Advisory services are offered through Investment Advisors, a division of Pro Equities, Inc., a registered investment advisor. Securities are offered through Pro Equities, Inc., a registered broker-dealer, and member FINRA and SIPC. Gulf Coast Financial Advisors is independent of Pro Equities, Inc. Any opinions expressed by Josh Knoll or Jay Stubbs is not reflective of the opinions of Pro Equities, Inc. and are solely their opinion. Thank you and have a great day.